Stephanie, energy outperformed last week, but it's still down for the year. What's your outlook on the sectors?
Yeah,
now?
we actually went underweight in the beginning of March. And the stocks have pulled back substantially. Actually, since the end of February, the OSX is down 20%. So we started adding to the position over the last couple of weeks, really right around when Halliburton reported their better than expected number. We favored the oil service stocks, the deep water stocks and companies, and of course ETP with the dividend yield.
And ETP, they announced today and they were going to acquire Sunoco. Were you surprised by this deal?
Definitely surprised by this deal, but not surprised by the strategy. This company has done a really great job in articulating what they wanted, what they wanted to be over the next couple of years, and that is less natural gas focused and much more oil, liquids, transportation, transmission, that kind of business, and that actually fits Sunoco's business. At first blush, I thought they were buying a refinery. And then in the deal, they're actually going to they're not including the refinery. They're going to continue to see if they can sell that business. So that is a sigh of relief.
Oh, that's good. So is the play here to look at natural gas companies that are successfully diversifying into other businesses like this transaction and then maybe like an EOG or a Devon or something?
Yeah, I mean, I think it's always good to have a diversified asset mix because we don't really know when natural gas is going to bottom. We think we're kind of in the process of bottoming, but you want to have some exposure for the long term there. But at the same time, in the near term, to buffer your cash flow and earnings, you want to have oil exposure with oil prices where they are. So I think it is having a combination, having the right mix. And we do favor Devon over the rest of the names in the portfolio, really because A, it's so cheap, and B, they have been transitioning from natural gas to oil over the last several years. So this is not all of a sudden this new strategy for them, which I think is underappreciated by investors and will lead to better production growth down the road.
And that stock's run a little bit last week going into earnings. So can you buy it into earnings? You just wait to get the report and then make a decision there?
It's been really hard to buy anything into earnings just because, I mean, look at Procter & Gamble, right? I mean, the stock is down 5% since it's reported, and that's a different animal altogether. But I think it is hard to buy into earnings. And I think, though, I like the long-term strategy. It's a very volatile stock, so you'll get it down. I mean, if it's up initially, it will certainly, you'll have a red day to pick at it. It is very cheap at a 20% discount to its NAV. And so long-term, that's why I feel really comfortable. But under 70, I like that. I like the price level.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to